Well, having fun yet? Are we having fun yet, guys and gals? What a day, what a day. It's Thursday evening. We're getting ready for Friday's trading session. Not just any Friday, non-farm Friday, coming right around the corner. We got a bunch of news tomorrow morning. We get some big moves on the charts tonight. I got a lot of great trades on my radar for tomorrow. You know me. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on non-farm Friday. As always, before we jump in and get this party going tonight, make sure you subscribe so you don't miss our next video upload. And as always, I appreciate you guys tuning in tonight. If you enjoy the video, hit that like button for me. But enough of the intro, huh? Let's get ready for Friday. Not just any Friday, non-farm Friday. Got some big news tomorrow. What's going on here in the markets? Well, boy, of course you can see here, everything is bullish, right? Bullish on the S&P, bullish on the Nasdaq, and definitely bullish here on the crude oil. We have a pretty straightforward kind of game plan on the S&P and the Nasdaq right now, looking for some pullbacks, maybe some reversals off of these highs. We definitely have a lot of great trades to watch for tomorrow after that big news comes out tomorrow morning. Oil is definitely the oddball of the group. We're certainly bullish right now after that massive short squeeze, which who could have ever seen that coming, right? Last night, great short squeeze, great session today. S&P and Nasdaq obviously are very bullish. Oil too. Yeah, there's some issues, right? There's some issues on the oil. We'll talk about why there are issues and kind of how we can trade around those issues. We're bullish, so we definitely want to buy some pullbacks right now. I'd love to grab some reversals as well. Again, I'm going to cover all my favorite entries, all my favorite setups. That way you guys know where the low-hanging fruit, the easy money is going to be to make on Friday. Before we jump in though and get into each individual chart here tonight though, let's make sure we're all on the same page. Tomorrow is not your average Friday. Remember, Fridays are always kind of known for being a relatively smaller window of opportunity. You know, volume is oftentimes a little bit lower on a Friday. We're going to kick that up a couple notches tomorrow. Really the two big events you want to be worried about tomorrow or aware of tomorrow is the employment number at 8:30. And then, of course, we have the vice chair, Lael Brainerd. She'll speak at 10:30 Eastern time. First of all, that 8:30 employment number, that is the one thing you want to kind of remember about this non-farm payroll number, especially if you're in Asia or you're in Europe. Remember, the markets are like riding a bicycle. It's easier when it's moving. So be aware overnight, people may be waiting to see what that number comes out tomorrow before they start putting their money on the line tonight. So if it's moving slowly, don't force it. Hopefully it won't be. Hopefully we'll get some good price action overnight for you guys, and you can make some money overnight with that. Just be aware though. Oftentimes in anticipation, markets do slow down ahead of the employment number. And then be careful those 5 or 10 minutes after that number comes out tomorrow. You know, I would love to say we can jump into the market right at 8:31 tomorrow morning, but typically speaking, by about 8:40, 8:45, the craziness will have calmed down a little bit. And we can start to put together the updated game plan tomorrow, right, in our trade room. So be aware of that overnight and those immediate kind of 10 or 15 minutes after that number comes out. And remember, one more thing. When it comes to that non-farm Friday, there are times where the market kind of goes into a choppy mess around that stuff. So, you know, like I mentioned last night on last night's video, don't waste your bullets on bad trades or forcing bad trades. I'm going to go over my favorite trades where the best setups are going to be for tomorrow. Don't force bad trades tomorrow, because what you got to remember is there's a lot of big players in the markets that don't even touch non-farm Friday. They save their capital for what we call Reaction Monday. Next Monday, that first Monday after non-farm Friday, is oftentimes one of the best trading days of the month. So don't force bad trades around it. If you don't know what a bad trade looks like, get with me in our trade room, and I'll show you exactly what good setups look like, what the bad ones look like. Then later on tomorrow morning, Lael Brainerd. Now remember, she is the right-hand gal to Jerome Powell, right? Jerome Powell is the head of the Fed. She's the vice chair, vice head, right, whatever. But she's back on the microphone tomorrow at 10:30 Eastern time. And I'll tell you, that might be the best gift we can get on a Friday morning. Because again, oftentimes markets do get a bit chopped up from those employment numbers. numbers. Hopefully she comes out and gives us a little shot of volatility. That'd be really nice to finish up tomorrow morning's trading session. So be aware of that typical smaller window of opportunity. Don't force any bad trades. Let that news come out tomorrow. And again, if you don't know what a bad trade looks like or what a good trade looks like, definitely get with me tomorrow morning in our trade room. Back to our charts here now. S&P, Nasdaq, crude oil. Now, guys and gals, whether you trade one of these markets, great place to start your career, or you trade all of these markets like we do every morning in our trade room, I'm going to cover all my favorite trades on each of these markets here tonight. You'll learn something new throughout the entire video, different trade variations, advanced tactics, and you know me, I try to wrap it all together and save the best stuff towards the end, so don't click off too early here. I'll make it worth your while sticking around all the way to the end. All right, we're going to go 1, 2, 3 right on through. Let's start off with the E-mini S&P. It's a pretty straightforward game plan here for the S&P going into tomorrow's trading session. There are basically three main components to success tomorrow. The first one, of course, is the strong move higher. You know, anytime we see a strong move in one direction, we expect to see what? A pullback and a retest of that high. If you've been watching this video this week, we have been talking about that constantly. It was one of the big reasons why we anticipated a retest of that low before that short squeeze that ripped late or mid-late morning here this morning. This is the same basic principle. Strong move in one direction. Anticipate the pullback and a retest of that high. Once we get the retest of that high, then do we look for that reversal? That will be lovely. Or do we see it push through that high and try to take out some of those bigger targets, 42.02, and then up to that 42.88 right from there. So that's one very, very big clue here. The second big clue is the size of this move. Now, this is probably not the biggest move we've seen in the last few months. We've seen a couple really big monster moves. This is a pretty big move, though, right? That's a pretty big move. There weren't any really deep pullbacks on the short squeeze. We talked about this last night. What do we always talk about whenever we see a big move in one day? We always know that we may see potential for buyers rejecting these high prices and trying to get a really deep pullback to get into something at a better price, right? Anytime we see a big move in one day, we always know there are two potential scenarios to look for the following day. One would be a deep pullback to attract more buyers into the market. The other would be a trading range, right? Because sometimes nobody wants to get out. Sometimes nobody dares to sell. It's so bullish. And so oftentimes the market will chop around and go sideways. That's a really big clue for us tomorrow, specifically that deep pullback. And the deep pullback also sets up a spike in channel. You'll notice too, we got that pop up and then kind of into that tight channel. Now, if you're a student of mine, you know exactly why we love spike in channels, because the first pullback of that channel is usually where all the buyers are waiting to get into. That spike in channel zone right there is a really important clue here for us. And it makes sense when you put it all together, right? So a strong move up says be ready to buy those pullbacks. Will we get a reversal or break higher? The big move today says be expecting the potential for a deep pullback or a trading range, and the spike in channel really gives us a really nice sweet spot for where we think those pullbacks have potential to go. The one thing you want to really kind of think about here right now is the kind of where the money will be made tomorrow. You want to think about getting in on that deep pullback, and then from there it's either going to be trading the reversal off of that high, which is very common, aka back in that low earlier in the session today, or that breakout and going higher, right? Those are kind of the three components that you want to be most ready for. The deep pullback, the possible reversal off the high, and then again the possible breakout through those highs here. So Nasdaq is very similar here to the S&P 500. Let's talk about some pullbacks here right now, and then we'll kind of work our way through this. I'll try not to repeat myself too much because the Nasdaq and the S&P are so similar. The three types of pullbacks. There are three types of pullbacks and these types of moves that you want to be ready for. One is going to be a shallow pullback trap. So a relatively shallow pullback. We don't get that deep pullback we want. Instead, all we get here is a relatively shallow pullback. Now remember, this is a really bull market right now, and we know the buyers would love to finish off that move back up to that 42.02, that kind of holiday high up there, right? That 42.02 and a quarter high up there. So as this thing gives a shallow pullback, watch out for a trap entry. Trap entries are excellent whenever you're trying to basically buy as low as you can buy, right? We want to buy a pullback here. If we don't get that really deep pullback that we'd love to get, that's exactly where a trap setup will really come in handy, just to make sure you're getting in as low as possible, trapping in some of those bears, and basically using their stop losses as fuel to push that run higher. The other one here would be just kind of your straight up pullback, right? Your pullback down to that low. And at that point now, what you want to focus on is trapping in some sellers, right? Remember, the easiest money you're going to make in these markets, in a bull market, is finding ways to catch the sellers stuck in a losing position. So as we see that market pull back, possibly around the low of that channel, we come in now, we wait for those bears to come in and try to get short off the moving average. Once they get short, now remember, it's a very strong move. They're going to want to go back and retest that high. So once we see those bears get short, we know exactly where their stops are. We know exactly where their pain points are. And now we can buy right into those stop losses. That failure pattern oftentimes turns into a pullback combination. Just make sure you grab that failure and that pullback before we go back to retest that high. That is a second type of pullback, a failure into pullback combination. The third type of pullback you want to look for is the one that we almost hope we get tomorrow, because it gives us the best risk reward, puts the most meat on the bone for us. It's a deep pullback. Now, when the markets give you a really deep pullback, or let's say the market kind of opens up here and shoots lower, you know what I mean? It kind of spikes lower, like it does a lot here recently at the open. If we get a deep pullback, specifically down in this area, that 41.40, 41.34 area, or really even a bit lower, will be fine by me. But if we see a relatively deep pullback here, remember, this is where we want to see it, because we expect that deep pullback because it's a big move here today. Big pullbacks are great, but you pay a price for it, and the price is momentum. We have to assume that with that strong move lower, just like a strong move higher wants to retest the high, that strong move lower wants to retest that low. And the bears are not going to give up so easily this time. So now what we want to do is let them try once, let them try twice. Then we know where those stops are. This is a slight variation to that failure setup that we talked before. These are great though, because as these begin to fail and you go higher now, again, looking for a two-try failure because of that strong pullback that we get. Two-try failure. And remember, this is where the fun starts. Now go out and draw a trend line off those highs, off that low, and then one of my favorite trades, I don't know, this could be my favorite all-time trade. I love this setup. This is almost a guaranteed winner when you do it the right way, right? Deep pullback, trapping those bears, use those stops as fuel, and then I always love to grab a trap or a failure or a pullback combo, any of the price action setups that I teach in that free trading course. Now, speaking of the free trading course, boy, I got so many emails today about the short squeeze and try not, like I said earlier, don't waste your bullets tomorrow on bad trades. Don't go giving back all that money you made today. Anyways, I know a lot of you guys and gals have taken the free course. You've learned all the setups. You know the rules. You're finding this stuff on your own on your own account right now. I'm loving hearing about it in the emails in the comment section. But listen, if you're here for the first time right now, if you haven't taken that free course, if you want to learn all the actual entry setups we use every day in our trade room, what I'll do is I'll put a link up here for you in the upper right-hand corner. I'll tell you, if you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're trying to transition from full-time working into full-time trading, that roadmap I teach in that free trading course will get you right back on the right track and help you start getting the positive results that you want in your trading. So make sure you grab that free class. Now, you can see how the market now is going higher here, right? Market now going higher here. Let's think about this now, because even if the market goes higher here, right, nothing really changes. Even if we go higher, all I'll do now is start adjusting these channels, right? Start adjusting these channels up, find those wider channels, find those prior swings, right? Start basically ratcheting all this stuff up, and we start looking for the same basic idea, right? Shallow pullback trap, right? Modest pullback, failure into pullback combo, deep pullback into two try of failure, and then we got that snapback as we go. Now, how do we trade the short off the high? How do we trade the breakout through the high? That's a really good question. Let's talk about that now on the Nasdaq. S&P and Nasdaq are very, very similar. Let's grab the Nasdaq here next. Most important things right now on the NQ as we open up here in Asia. It was a really busy day here in the office today. It was a fantastic day, one of the best days we've had in a few weeks. I can't complain, but as you can see, I'm recording this video a little bit later than I normally do here today. That's all right, though. I can't leave you guys hanging for tomorrow. 3 basic clues, right? One is the strength of that move. Anticipate that retest of that high, right? Second thing is the size of that move. Don't be surprised if it really pulls back deep, right? Third thing is that spike in channel. Again, spike in channels give us a pretty good roadmap for where those levels are going to be. Again, what I'll do is, let me just adjust this a little bit for us there. We'll get this channel on overhead there, back down there, right? See how I adjust those channels? I draw them right off those highs. See how I'm doing that? I draw it right up off those highs and then link it right down at that low, and that's where the magic is going to be. Now, I don't want to cover too much the same stuff here on the NASDAQ, right? I know you guys have busy schedules like I do. So again, remember, shallow pullback trap, right? Relatively deep pullback, failure into pullback combo, deep pullback to try, failure, and then as we always say, right, first test is the best test, okay? Same idea here on the NASDAQ as well. How do we trade the breakout going higher? And how do we trade the reversal, right? The reversal back down again. Let's talk about breakouts first, okay? Breakouts look more likely right now, but at the same time, who knows, right? Who knows? So breakouts going higher. There are basically 3 different types of breakouts you want to look for in these types of scenarios. One of them is called a 1, 2, 3 breakout. You have to be aware of your surroundings. We're up at these Memorial Day, kind of highs right now. And so you got to be aware. We are very bullish, but we are right into major areas of resistance. I don't want to buy a shallow pullback right now, right? I want to buy that deeper pullback, as I mentioned. However, if we see this market pull back to the moving average and jump going higher here, we call these 1, 2, 3 breakout patterns. 1 is the push up, 2 is the jump or the pull back, 3 is that jump off the moving average. Make sense? 1, 2, 3. Now, when you get something like this, just draw a new channel off that high, find or trend line off that high, find that channel low, drill down to your entry time frame. We'll talk more about that in that free video class, and grab the entry setup off of that low. Trap, failure, pullback combo off of that low. Makes sense, right? Makes sense? It's a 1, 2, 3 breakout. Okay, now, if we get that 1, 2, 3 breakout and really pops like that, remember, anytime we see a strong move, we know, right? We know, of course, we're going to probably get that retest. Now, maybe this breakout pulls way back, right? Now we go out, we find that bigger channel, you see what I'm saying here? And we use that to try failure. 1, 2, and back up. Is that making sense, right? So if it really pops like that, we're looking for entries off the low of that small channel. Or if it really shoots lower, that 2 try failure we mentioned earlier, and then again grabbing that, right? Grabbing that pullback as we go. Sorry, it's getting a little bit cluttered there. But again, when you take that free class, you join me in the trade room, you'll see all this stuff on, real charts, right? So they're scribbling on the charts here right now. Second type of pullback or second breakout pattern. One of my favorite breakouts is the pop and grind, right? We all love the pop and grind. So it pops up. But now, instead of pulling back and jumping, now it begins to grind and grind and grind. If you see a pop and grind, that's a very, very big clue, because it basically tells you the opposite side of the market has completely walked away and joined the buyers at this point, right? These are not buyers buying up here. These are sellers getting out of short positions, and that means any pullback that comes in, buyers will be waiting. At this point, draw that trend line nice and tight up off that high, bring it down to one of these bigger anchors here, and look left. One of the best things to look for are those prior swings. Get underneath prior swings, get underneath the moving average, look for traps, look for failures, right? Look for pullback combinations. Again, if it really pulls back, use that 2-try failure and that channel test that we mentioned earlier, all right? That's called a pop and grind breakout, okay? Great example there. There's one more type of breakout here. Let's talk about that on the oil. We'll talk about oil for the last breakout here tonight. I'll make you stick around a little bit longer here, give you that final breakout pattern. Now, one more thing here on the Nasdaq. How do we trade the reversal? Okay, what's a reversal look like? There are two types of reversals, and again, this will definitely apply to the S&P 500 as well. One type of reversal is the double top reversal. Okay, so we get the pullback we want, we take our profit off back at that high, and now we, instead of breaking higher, right, with again the 1, 2, 3 breakout, the pop and grind breakout. Instead of that, we now get that reversal off of that high. How do we time that entry? These are one of my favorite trades the last few months. So again, we pop up, we retest. Now, at this point, who's buying up here? Seriously, who's buying up there? Are the pros buying up there? Are the market makers, are the seasoned veterans, the big money, the people who move these markets, are they buying high? No, they're not. They're buying down here, right? They're taking profit up there. Okay, the smart money, the strong hands in the market, they're buying low. They're not buying way up there. And so what happens is when we go back and retest those highs, this is when we start seeing some of the weak hands come in and start to basically churn this thing up. This is where that 2-try failure comes in handy for this reversal. I call this a double top reversal. It's basically a retest of that high, and then now the small money, the weak hands, right? The sucker who just sat down at the poker table with a handful of chips, they sit down now and they start buying right into that high. Now, once we let them try twice, now why twice? Because this is not a bear market, it's a bull market. I don't care where we are, it's still a bull market. We don't have momentum to use to give us an edge in this environment, right? We've already got that, right? Momentum's already been juiced on that. Now we have to use the buyer's stop losses as fuel for this reversal. Make sense? If I'm not buying low, I don't have all of that momentum to give me that edge, right? So I have to use something else to give me the edge going lower, to give you fuel going lower. That's exactly why you want to let the buyers try twice. Think about now where their stops are. Right? Think about where their pain is. If you were a buyer, if you didn't know any better, where would your stops be? And that's exactly where we start looking for that short. 2-try failure. Now, just like the other 2-try failure buying the deep pullbacks, the fun is just beginning now. We now can draw a trend line off that low, draw a trend line and find that channel high. See how I'm doing that? And then one of my favorite trades is that first test off the high of that channel. So again, it's a 2-try failure. Remember, this is after the retest. Okay, not right now. Okay, I want to make that very, very clear. We're not trying to short this market right now. I don't care if we're at a major level of resistance. Okay, it's too bullish. You'll wind up getting short right into those buyers coming in. Now, I'll talk about what if it does reverse in a V-top here in a second, right? I'm not going to leave you hanging on that. But for right now, though, be very careful trying to force a reversal until we get that pullback and that retest. Then you're going to have a whole lot easier time because now the big money is getting out of their trades. It's only the weak hands at that point. All right. If that makes sense, give me a hell yeah in the comment section. While you're down there, hit that like button for me. We hope you're enjoying the video so far here. So 2 try failure, trap in the weekends, and then as it begins to roll over now, bingo. Do not miss. Do not miss. You know, like Steph Curry getting the ball right under the rim. Your job is to put the ball in the basket. Your job is to take that trade. Okay, that's a really good trade. One of my favorites. Now, where do we think the market wants to go at that point? Last week's close is a definite objective. Absolutely last week's close. And again, this range down here, 12,633, right? 12,603. That range is still in play that we talked about in last night's video. But you have to think, though, that prior week close, as I mentioned last night, the closer we get to the end of the week, the more that last week's closing price becomes a magnet. It's like clockwork every week, right? We saw that play out here in the markets here this morning. I love that. I love that reversal. Keep that on your radar for the S&P as well. Okay, so double top reversal. Now, I know what you're asking now. Well, what if it just V-tops? You know, we get those all the time right now. All the time we take that high out, we pop right down. Okay, here's an easy way to trade that V-top. V-tops are very difficult to predict. They don't usually, we don't see normal markets unless something dramatic happens, which happens all the time these days. We don't see normal markets make this big move and then reverse right back down again. All right, very difficult to predict those V-tops. So this is exactly where you want to look for that pullback and that grind. Okay, that is what it will most often look for. Okay, now remember, there's a very big difference between a pullback, a 1, a 2, and back up, right? That's the setup to be long or to buy into those stops. If it pops lower and begins to grind down, what does that tell you? What's the grind tell you? It tells you the opposite side of the market has basically walked away. That's what causes that grind down. Just like the short squeeze that we so aptly, kind of anticipated, not predicted, but anticipated here today. That's what causes that short squeeze. What causes that fluttering higher is not I'm sure there are some buyers buying it, but the majority of it are the sellers who had this whole move going lower. They're getting the heck out of the way. That's what's causing this thing to float higher, okay? And it really gives us a great chance to trade the next pullback. So you mark off that low, you mark off that high, you look left, you find those prior swings, and you get ready for the trap, the failure, the pullback combo right off of that high. Now, if we get that pop and grind, remember how the first leg and the third leg are almost always symmetrical. You know what I'm saying? First leg, third leg. First and third legs are usually very close to being symmetrical. You'll see an example of that here on the oil here in a moment. So that's a good way to play it on that reversal. I know. There's no magic indicator or magic trick to predicting that reversal. That V-top is just, it is what it is. Welcome to trading. Not everything is easy to predict. I know we make it seem pretty easy sometimes on these videos, but that's hard. Now, another one would be we pull back underneath the moving average. Okay, now the bears come in. They don't fail, right? They hold and they jump off that moving average. Okay, that is a 1, 2, 3, 1, 2, 3 reversal. These are pretty easy because anytime you see a strong move like that, draw that low, find that high, find those traps, right, and grit above those prior highs. Ideally, if not, get above that moving average. There's plenty of ways to make money off the high of that channel. And again, remember, I've got my first leg, third leg, right? Does that make sense? Okay, don't worry about the size of the middle leg. The middle leg is very rarely going to be your measuring leg. And again, guys, everything I'm talking about right now can also be applied to the S&P 500. It's almost the same exact chart. Okay, so keep that on your radar as we go lower. And again, if we pull back on this and punch and run through, remember, it's that 1, 2, 3 breakout. It's that pop and grind breakout. And we'll talk about one more breakout here on the oil as well. All right, looking good here. Looking good. Nasdaq's done. S&P is done. We know how to kind of adjust this as it goes higher. Again, if they keep on pushing higher, just keep on adjusting that channel. Now, hard stuff last. This is the hard one of the night tonight. Okay, this is the one that doesn't give us a lot to work with. Well, let's go over it here. There are three main keys to our success tomorrow. The first one is the recent retest. Okay, what do I mean by that? Well, as you can see here, and let me get rid of some of these measured moves here. You can see where this came from now, right? So think about it. Anytime we see a strong move in one direction, we know there's an edge right there to sell it and retest that low, right? And again, this has been a common theme pretty much the entire week this week. It's one of the easiest ways to tell where the best trades were this week. We've been talking about all week. So as we go higher, right? Big pop up, strong move up. They retest. Okay, that's mission accomplished. Okay, nice strong pop up. They retest. Mission accomplished. So at this point, there isn't. We are bullish. Don't get me wrong. We're bullish right now, but we are not the Nasdaq, right? We are not the S&P. Okay, these are very strong moves here. You know what I'm saying? We're not that. Okay, the oil again. It's there. You know, we're bullish, but we're not that bullish, right? We've already retested. We've already kind of accomplished all of the mission. Second thing are the measured moves. Now, I mentioned earlier, right, there's one right there. This is a trading range. Anytime we see a range breakout, just so you know, for future reference, anytime we see a range breakout, the breakout leg makes a measuring leg as well. Just so you know that for the future. Anytime a range breaks out, the beginning of that breakout is kind of the brand new start of the entire series here. So there's a, bottom line is there's considerable amount of resistance, and we don't have that edge anymore. Still bullish, but without the lack of a retest, now you can see why, okay, we need something more. Now, I will give you this. There's a range overhead, right? Range overhead. And the end of the month of May, if I can zoom back up here, right? See that big move up right there, right? So that is a pretty big move right there. And you have to think, right? You have to think that the buyers would love to go back up and take out that 120. Right? Now, you could easily argue they had their strong run, they retested, and then reversed. You could easily make that argument, right? But that range up there, that 120, it seems like a pretty psychological, level there for us. And so you definitely could make an argument on this that the buyers may be trying to push that round number 120 and take out that high, right? That is, I think, probably one of the most not the most important clue, but is an important factor we have to keep on our radar for tomorrow. So knowing all of this, the most important thing we have right now is we don't really have an edge. Again, not like the S&P, not the Nasdaq. We don't have much of an edge. So this is one of those situations where I tell all of our students every morning in the trade room, when you see something like this, we need to wait for more information. And I know you don't want to hear that right now because that's not what makes, these videos fun, but we have to wait for more. Let's talk about the long side, the short side, kind of how to do this thing here on the oil. First things first, you can definitely see the channel coming up. And even though it is a relatively big move, it's like a $7 move today, I would be very concerned here right now with a deep pullback. A deep pullback right now does not seem like the type of trade we want right now. And a lot of that is because of that range and that last week's close. And really, for the most part, you can really see this could easily be just one big trading range. So a deep pullback doesn't seem like the best setup here right now. What I do want, though, is a pullback. And when we get that pullback here now, we don't have all that momentum to work with anymore. So we need to get some other edge. We need something else to help kick that price up. And that's exactly where a two-try failure comes from, right? It's exactly where that two-try failure comes in play here. Make sense? Why twice? Because again, we don't have a lot of an edge right now. We need to create that edge by trapping in these bears, getting them all trying to go back to that last week's close, back into that trading range, maybe even back down to retest those big lows down there. Once they try twice, then we have the fuel that we need. Now all those stops are sitting right there. Take a quick profit target back to the high and see if we can hold that runner up to that 120 area. You know what I mean? I really, really like that trade on the oil. Now, as we go higher, if we start seeing this pop and grind, you know what that is now. Okay, if it pops and grinds, mark that low, mark that high, find those prior swings, grab those traps, those failures, and again, first leg, third leg, back into that range will be a really easy objective here for those bears, right? Keep an eye on that. Also, too, if we pull back and we, of course, grab that and jump off that moving average, right? That 1, 2, 3 reversal pattern, that is also reversal. Mark off that low, mark off that high. Now, this may not be the biggest potential trade, but remember, anytime we see a strong pop off that moving average, there's a very good chance we at least go back to retest that low. So grab some profit off there, leave the runner just in case we get lucky and the market continues down to retest that low. I always like to leave a runner, and one of the nice things about the markets now is you have micro contracts. So you can trade the micro oil, the micro Nasdaq, the micro S&P. I have so many students that are doing really, really well on micro contracts right now. I know it seems kind of counterintuitive because the cost per tick is so small, but you can trade a much bigger position size and you can scale out of your positions a whole lot easier. All right, I have a whole section in the video course about micro contracts. You'll learn more there. So definitely, definitely get involved with that, and you'll learn more about micros here. Or just come out and join me in the trade room. We can do it all together. Watch that reversal as we come off of that high. What would make our job a whole lot easier right now would be if we could get this thing to pop. If it could pop up, then we have everything we need. Then we have a strong move. We know now to expect that pullback, right? So if we can get a little pop going higher here overnight, then what we do is we adjust that channel. Just like I showed you on the S&P and the Nasdaq this evening, how it pops up, just keep on adjusting that channel. So we may end up, with something that ends up like this, right? Where we end up getting that run popping, and then now we go out, we find that, right? We find that new channel. Hopefully as the market goes higher here, we can get some traps involved. I can find that adjusted channel. I can try to get that trap. I can get the trap. I can use that failure now. Remember, at this point now we have momentum. Now we have a strong move. Okay, now we can leverage that to retest that high. And then what do you think? What do you think the chances are we get that pop up, that trap or that failure pullback entry right off of that low, and then guess what? They retest that high, because of course that's the objective. And then from there, the buyers come in, they try once, they try twice, stops are sitting right below those lows, that double top reversal, find that channel, right, and drill down and go from there, right? Makes sense? I know it's a bit sloppy here tonight, late evening here. Been a long day here. Been a great day, but a real busy day here in the office. That's a great thing to keep in mind. And again, that kind of piggybacks we talked about on the S&P and the Nasdaq, right? So keep that in mind there. And then obviously here, 1, 2, 3 breakout going higher. If we pop up, we hold that pullback, right? We jump and run, find that new channel, drill down, grab that first test. It pops and grinds going higher. Same thing as we go. Don't forget that final breakout pattern. And the final breakout pattern is the 2-try breakout. That is the very strong move higher. That is that shallow pullback, that higher high in price, and that trap. Keep your eyes on that setup. This is a very, very common setup. It happens all the time. You see an example right here from earlier today. Strong move up, shallow pullback, higher high in price. Everybody wants that trap. It's right below that low. Okay, that is the same exact setup we look for over here. Remember though, the one thing about that setup is it needs to really have a strong pop as we go higher. Again, that will also apply to the S&P and the Nasdaq as well. So keep your eyes on those really good pops. Any of those 3 breakout patterns can be used. And again, really watch out for that move up, that pull back, double top, right? And that reversal going back down again. Or if it goes up and simply V tops into that grinder, then we go out and we start looking for that short off of that high. All right, guys. I wish I could anticipate or predict how the market's going to react to that big news tomorrow. But right now, we got a pretty good game plan put together. Whatever you do tomorrow, again, do not force bad trades tomorrow. Save those bullets for reaction Monday next week. Don't force trades too late in the day tomorrow either. It is a Friday. And don't go giving back all that money you made today. I know a lot of you guys had a really good day today. So don't go giving it all back. Keep your head on straight. Keep your mindset on straight. And again, if you don't know what a good trade looks like, if you don't know what good price action looks like, get with me in the trade room. Right? Get started. I'll put all the membership links, all the free course links in the description of this YouTube video. Don't be afraid to call the office. I'm always here to help out, answer questions about charts, data, brokers, things like that. So don't be a stranger. Call in the office. And as always, you can always type those questions into the chat, into the comment section down below. I hope by now you've learned a bunch here tonight. Hope I've earned a subscribe, or at the very least a like on the like button here tonight. Drop those questions if you got them in the comment section below. And I'll see you guys tomorrow morning in the trade room. If I don't see you tomorrow morning in the trade room, we'll come back next week. Got a full week next week. Again, the week after non-farm payrolls, one of my favorite times of the month. So make sure you subscribe so you don't miss our uploads next week. And get ready for some more good stuff coming up next week. But hopefully I'll see you soon in our trade room. If you're looking for a good place to learn and trade along, you'll love our trade room. Got a great group, got a great video course. But enough of that here tonight, though. I've taken up too much of your time. Have a great rest of your evening. My name is Joseph once again. Be well, be nice to each other, and you better be here again next time. All right? As always, guys, we'll see you guys soon. Adios, amigos. Bye-bye for now.